Hey guys, welcome back to the channel. Today's video, we're going to be breaking down buying a home in the next 5 years and 5 things that you can do to prepare for this purchase. Now, buying a home is the absolute biggest purchase you'll probably make in your entire life, which is the reason why it brings on undue stress, nervous about making a mistake, but there are a lot of things. Now, looking at a 5-year trajectory can really make a big difference to allow you to prepare for a couple of different things. Number one, take a look at your financial situation. This is super important, guys. Before you make any financial moves, know exactly how much home you can afford. With it being said, take in all variables. Not only the purchase price of what the home is going to be, but what does it include with taxes and insurance is going to make a big difference. Also, what does it cost to run an actual home? When you look at the heating costs, the electricity, the cable, the water, there are a lot of additional fees that come with home ownership that are outside or excluded from repairs and maintenance, things of that nature. General rule of thumb is 28% is what you should put towards your house. Now remember, we've done the 50-30-20 rule, a couple different budgeting ways, but 28% is roughly what you want to accommodate for your housing payment. So what does that mean, guys? If you're making $5,000 a month, your 28% rule would give you $1,400 on your monthly mortgage payment. This does include interest, insurance, and taxes, everything out the door. On a $5,000 salary, you want to stay about $1,400. Number two, improving your credit score. One of the biggest impacts that you have, guys, with your credit score, mortgages and lenders will look at this to determine higher credit score is the likeliness that you're going to repay the loan back. Where on the opposite side of it, if you have a lower credit score, sometimes you will not qualify to get a home loan, which is super, super difficult to deal with, especially if you are looking to purchase. But two, you might also have a much higher interest rate, which means, of course, the home is going to be more expensive. So how can you know how to improve that credit score, guys? Number one, pay down the existing debt. Paying down the debt is not only going to give you more ability to actually pay and afford the home, but the debt elimination is going to really make a big difference when you look at credit utilization and increasing your credit score. So not only your debt to income ratios, which are a big factor when making mortgage decisions, but again, it is huge to have a good credit score. Number two, paying your bills on time. If you have a 3 to 5 year window, guys, getting collection accounts paid off, getting all of your accounts in good standing, making years and years of payments on time to all of the debt you have, as well as eliminating the specific debt that you have, credit card debt, things of that nature, will be incredibly important. And the final one on this one, guys, is paying attention to negative items on the credit report. If there is anything that is in collections, in default, any inaccuracies on the credit report, you want to make sure that you take care of those. Now, late payments can stay on your credit report up to 7 years for delinquencies. However, one late payment, that is right, guys, one late payment can actually wipe out 24 on-time payments, which is absolutely crazy to think that the credit scores are judged that harshly, but they absolutely are. Now, number three, maximize your savings, keeping down payment funds in conservative accounts. When we talk about this, guys, looking at CDs, depending on how far you're looking out, high yield savings accounts, you want to keep the money liquid, and you also want to keep the money there for a considerable amount of time. If not, if you're looking to get award letters, if you're looking to get things of that nature, get all of your things really in line when it comes to being able to get a home. Saving for home ownership is super important, guys. Not only is it going to provide you with the down payment for the first home that you're looking, you're not going to be scrambling for money. You're already going to be budgeting that payment in there. So making sure that it is already set aside and you know exactly where that money is going to really come from. So where to keep the funds? Like we said, guys, high yield savings accounts, money market funds, CDs, bonds, anything that is going to be a shorter term. So if by chance something comes up in the market that you want to jump on, let's say it's a foreclosure, it's a good deal home, anything of that nature, guys, you are going to have the liquid money there. So you can go ahead and put that offer in after you get the pre-approval, everything of that nature. And the final one, guys, speaking with a loan officer. Now, this is super important, guys, starting to really connect the dots and knowing exactly what you have to look at before you do the application. Now, unfortunately, at this point, a lot of loan officers that I have seen in my career at both banks and credit unions, they will be happy to really go through, explain the process, everything you need to do. You really need to start with the education before you get into the home buying process, because a lot of people will try to sell you all kinds of different things under the sun just to make commission on what they're going to be selling you. Products and services, again, there are a lot of places. Make sure that you're getting the best bang for your buck and you are making sure, again, that you know exactly what you want. Now, the final one in here, guys, is keeping your decision personal. This is very, very important when it comes to the home. Really, where are you going to live? What does the cost look like? Do you want to live in the city? Do you want to work in the city? Do you want to commute? How many bedrooms do you need? How much might you grow your family in the next 5 to 10 years? Are you looking for multi-general housing where your parents or in-laws might come in later? There are a plethora of things to really think about, guys, before the home buying decision. Because like I said, it is the biggest decision that you are ever going to have in your life. So making sure, again, you put some time and effort with just yourself or your spouse, whoever is going into this decision, taking them all into account, especially if this is not the starter home, if you're moving into another home, could possibly kids. What does the neighborhood look like? What does the schools look like? You know, where are you really moving to that you want to make sure that you live? So bottom line, guys, it is never too early to think about home ownership. Honestly, with the cost of mortgages today, it is super important to really map out how you're going to do it. But in addition, guys, it's a lot cheaper than renting. That is one of the big things here, guys. We are seeing mortgages coming in from about $1,000 to $1,400, $1,500. We are seeing rates for apartments in my neighborhood that are actually going for the same amount, if not significantly higher than actually owning a home, which is kind of crazy to think about, that rent has actually superseded mortgages. Even at the current rates, we are seeing a lot more rent payments that are ranging from $1,500 to $1,800 per month based on how they are built and where exactly you are living. So again, guys, let me know in the comments what you guys think about considering buying a home in the next 5 years. If the 5 steps are things that you're looking to prepare, again, it is super important to keep this in mind when you're looking at buying a home. So guys, again, that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.